All right. Hello, everyone. Welcome to our webcast on selecting an option strategy. I'm Connie Hill. Happy that you join me here today. Every week, Thursday at this time, we get together and discuss some of the different option strategies we might inquire and utilize in certain circumstances. Today, there's going to be a big smorgasbord. Okay. We're going to look at something for earnings, something not for earnings, something where we had to change the trade up to try to salvage it. And I've got a couple of new trades. One I put in before our class started, another two we're hopefully going to put on while we're here. So I've got a big fat agenda for us today. So we don't want to waste any time, but we will welcome in Cameron May. Cameron is a fellow coach and friend. He knows option strategies inside and out. In fact, he teaches getting started with options. If there are any strategies you're not comfortable with that we'll talk about today, man, Cameron's class is the place to be so that you can learn about those option strategies. He teaches that on Tuesdays at noon Eastern time. So want to put a plug in there for Cameron. Hope you're following us on X. I'm Connie Hill CS. Cameron is Cameron May CS. We'll post educational content throughout the trading day, things that we see. Today was kind of an active day out there in the market, which sometimes it is. Today was extra for me, at least. Let's go through our disclosures and we'll get down to our agenda. Options carry a high level of risk and are not suitable for all investors. What we talk about today is intended for education and informational purposes. Don't consider a recommendation. We will be using the Paper Money software application. It's what you download to your computer. It's the most robust version of Thinkorswim. It's different than the web, different than your mobile. With long options, investors may lose 100% of funds invested. When you're doing multiple legs and in some of the strategies that we work with, you may incur multiple commissions. Past performance of any security or strategy does not guarantee future results or success. All right, guess what? These events are on the docket. Get to Miami if you can, if you're an advanced person. Dallas is going to be a technical analysis option strategies workshop. Bellevue, same thing, on the West Coast. Okay, we show you these. You can get signed up so that you can take advantage of these. If they're close, and maybe we don't go to your hometown in wherever you might be, they don't come to my hometown very often, then you need to be able to get somewhere sort of close, right? Make a nice little jaunt and you will enjoy eating out of the fire hose for a couple of days on those 2-day events. All right. We typically take a look at the market, see what's going on, talk about some different option strategies, what we might consider based on what we're seeing in the market. We're always looking at examples. Today I have several examples I want to go through. And we, of course, are going to be working in and building a portfolio. This is an example trade portfolio. I hope you guys are following along with these trades because that's where you really learn. If you will paper trade it and not just sit there and watch me paper trade it, then you'll get a lot more out of it, especially if you're pulling it up, looking at the chart, looking at what happened to your option in your paper money account. That really can be a fantastic learning tool. So please take advantage of that. Now, earlier, I went ahead and I put in a link to our Selecting an Option Strategy playlist. Those of you that are subscribed to our Trader Talks can find it super easily. If you haven't subscribed to that yet, hit that blue icon in the bottom right-hand corner that looks like YouTube, and it's kind of bluish in nature. All right. I do want to say a quick hello. We've got Wild Goose, Alfierno, something like that. Life in the Fast Lanes, JDML, David, Greg, Sharon, the Office Boss Mail Center. That's quite a mouthful for that particular person. Riceford, and many, many others of you. Yeah, Cameron's gone ahead and posted that playlist as well. So those of you that are new, go take advantage of that. This is more of an advanced level class, and so I'm going to expect you to be challenged a little bit. Maybe some things aren't as familiar to you. That's okay. Hang in there. Learn as we go. Let's go take a look at the markets. Did we end on a high note or a low note today? We'll hop on over here. Here's our SPX. Ooh, we've got a green candle here. I can get my little thing here to get out of my way. It looks like we ended up 0.21%. So towards the end of the day, kind of nudged up there. We've talked in various classes throughout the week that maybe we're starting to see possibly the creation of a double topping pattern. What does that mean? Well, it means that the stock, or in this case, the index, is going up to highs where it has been, and it's having a hard time getting over it. All right, so in this case, we've got 69.20 or so right up here as a high, and it went really close to it today, racing up against that area. And we know it's kind of a gray thick line. It's not a teeny skinny line. So it's running up there. Let's see, are we going to get a breakout, or are we going to get another pull down and kind of stay in the sideways rectangle that it's been trading in? NASDAQ looks somewhat similar, although I'm going to say not as bullishly strong as the SPX. And on the NASDAQ, I put in the wrong ticker symbol. Let's make sure we get the right one. NDX. There we go. All right, that's looking more like what I was looking for. It hasn't gone up quite as high as the previous peak. And so this one, we're seeing possibly a different topping pattern. We'd call this topping pattern a head and shoulders, right? If I were to draw this on the screen, if my mouse will cooperate, I guess it doesn't want to cooperate right now. This would be, if we're looking at somebody head on, this is a shoulder, this is their head, this is the second shoulder. So it's setting up like one, but the way it completes the pattern is it has to go down and break this neckline, which is basically the support between these two low points. And so we'd be looking at that, maybe that's 24,210 is where my hard line in the sand is. So if we see a significant break below there, some people might say, okay, that head and shoulders pattern is gonna reverse us. But typically when we see reversal patterns, we want to make sure we see the confirmation. All right. VIX. Well, if we ended up on the day, our VIX should be what? Our VIX should be headed down, and of course it is. Looks like it's down about 5+% here today. We can see kind of a big red candle down there to about 1494 is where it closed. So down in a lower area where volatility has been not so dicey. Now, it could continue to drop, or it could say, oh, we're done. Look for a reversal. So we are always going to be on guard waiting to see if that reverses, because if it does, then we're probably going to see in the markets, the SPX, NDX, Dow, Russell, we'll probably see a pullback in them if we get a spike on our volatility. All right. DJL says, hey, there's some big earnings coming out right now. There is, and we actually are going to spy on one of them. It might not be the one that you are trying to keep track of, but we're going to spy on one of those. So we were just talking about our ConocoPhillips trade. The fact that it's working for us, it's above 90 at short strike price. The fact that it could go sideways for a while, it could go down for a little bit. It's really in pretty decent shape. Being a short put vertical means we're waiting for the theta to decay in our favor. And sometimes these trades just take a little bit of time. They're trades of patience. But many times when traders get a big chunk of it, they're happy to move along. So on this one, all right, we're going to let it continue to work. All right. Hopefully, we covered what you guys missed on that. If there's anything critical, somebody tell me and I'll go back and repeat. We probably finished up with Reddit and we were just covering ConocoPhillips. All right. Now, we looked at the markets initially, right? The SPX, the NDX, looking at some bullishness. What strategies might be working in this environment? We've got low VIX, and we've got churning away. We've got possible reversal pattern here on the SPX, possible reversal pattern on the NDX. So some people might not be incredibly bullish, right? They might be a little bit on the side of saying, might be a little neutral here. Okay, if we come over here and look at some strategies. So somebody that maybe is looking at some neutral strategies might consider iron condors, where we're looking for the stock or kind of stay in the middle of where it has been. A straddle, where we don't really know what direction it's going. A butterfly spread, same thing there. Calendar kind of is a little bit on the neutral side, but although we take a slight bias, put calendars to the downside, call calendars to the bullish side. Double diagonals are basically covering both ends of the spectrum, much like we might do here on a straddle. Okay. Since we're not like in major bearishness, we might not consider a lot of these strategies, but maybe if you personally are a little bit bearish, yeah, you might consider, maybe you're feeling like short call verticals are kind of singing your tune and you're feeling it. Or if you're maybe think, oh, I think on that NASDAQ, yeah, it looks like it might be reversing. Maybe you are getting bearish on some technology stocks. Okay. Or maybe you're like, it hasn't changed yet. We haven't seen confirmation of either of those reversal patterns. So maybe you're going to stick with your bullish strategies. Okay. Now, we've got a stock that is announcing earnings right now. And I don't know if you guys are looking at it. We're going to go take a look at. Oh, on the Reddit trade, are we still in it? No, we closed that trade down today, Alex. That's what I was explaining earlier. We're out of that trade. Let's head back over here to Thinkorswim now. Okay. There is a stock announcing earnings, and it's good old Lululemon, right? Lulu has been kind of in a sideways pattern. A lot of times we don't do earnings plays in our class here. Today, we are going to do a little bit. Earnings plays are always speculative, okay? Meaning we're not necessarily always playing the odds. You might think you know what they're going to say, but we really don't. We all get to find out together what they're going to say. Their conference call is due to start in about 10 minutes, and sometimes that changes things from the initial release of the numbers. But let's go look at what Lulu is doing right now. Okay, so let's go from a day chart. We're going to come over here to a 1 day, 1 minute chart. And on your settings, what you need to make sure is you come over here to equities. You want to come over here and say show extended hours trading. And I like to highlight that. So that's why there'll be an area in gray. Okay, highlight extended hours trading session. We'll say, okay, it hasn't been trading very long. Well, what did it do today? Kind of just hung along sideways like it's been doing for the last couple of weeks. Now, the initial reaction looks like it was to the bullish side. Not guaranteed to stay there, right? Looks like the candle we've got going on right now is a long red candle headed possibly down. So definitely some volatility. Now, options trades aren't going to be trading in after hours, right? But for the trades, if you're interested in trading something over earnings, it's nice to be able to see what's the initial reaction. And then, after they go through their conference call, things might change a little bit. We've certainly seen that. So we'd want to come back in the morning and say, okay, what is it doing in the morning before the market opens? Is it still looking bullish or is it not looking bullish? Now, somebody's letting us know, Debbie's letting us know that Avgo, they were due to report earnings as well. It looks like they beat their earnings. Very good. Something I was looking at this earlier today. Let's go back to maybe say, let's just go back here, say that, let's go 6 months, okay? Where we could see stock been trending down. Some retailers are doing well, some retailers aren't. You guys know, come December, it's kind of a make it or break it for a lot of retailers, right? As we get into the holiday season and they see how generous people are being and if they're, purchasing, right? So with that idea in mind, we did a couple of trades on Lulu. First trade was to try to take advantage of a lot of implied volatility. Okay, this particular trade is very speculative. I wouldn't expect anybody to be super comfortable with this unless you do a lot of trading around earnings. And again, we don't do a lot of speculation in this class, so this is just going to be kind of a one-off. We're going to come over here to the monitor tab. Let's collapse ConocoPhillips. Let's open up Lulu. We actually did 2 trades in our class account here. Okay. We did a diagonal with the idea that we wanted to collect some implied volatility. And so that's the chart that's on the top. We sold the 205 calls that are going to expire tomorrow. Okay. And we bought next week's long call, kind of our hedge, with the intent, maybe if the stock does go up, that maybe that one will increase in value. Okay. Let's go just back here for a moment, and I am going to go back to that 1 day, 1 minute and see just kind of what the latest looks like. Okay, so maybe the latest number is up here about 201-ish. Okay, we're going to say 201-ish currently, not guaranteed to stay there. Where's 201? Well, 201 is up kind of in this area. Let me show you the trade tab here. And I want you to see why this first trade, we were looking to take advantage of high implied volatility. Can you see here on the weekly, this has, right now it's showing, when we got in earlier today, I think it was about 235% implied volatility priced into the at the money options. Huge. Look at this. And our leg that's long, what's it at? It still is pretty pricey. 115% implied volatility here, but this is just like so enormous. It's like, oh, God, give me a break. Let's try to capture some of that volatility. Okay, so that's why we did the diagonal with the idea that what we're selling, it expires tomorrow. We're hoping, because this is what implied volatility does, right? When the news is out and everybody knows, comes crushing out of the option. Right? And that's where we can try to collect some of that data. Let's go to the trade tab, or actually let's go to the analyze tab here. And risk profile is fine here. Let me say hide simulations. And I'm going to hide, I only want on here. We're going to take off the second trade, which is a short put vertical, because we're going to look at these independently. Okay. This is kind of interesting. Notice here that it's the diagonal we're working with. And where is our theoretical max gain? Well, it gets maxed out here if it goes super high, right? Our theoretical max gain at options expiration tomorrow afternoon is if the price of the stock gets up in the neighborhood here of, let me take my mouse just right there. That looks like about 205. Okay. And then it's maxed out. Well, the stock hasn't gone to 205 yet. Where did it go? Okay, it went to about 201 as of our last looking at it. So I'm just going to kind of put my mouse at the 201 area, which is right there. And you can see down in the bottom left-hand corner, the values that come on the screen for the turquoise line and the pink line. Turquoise line is saying maybe at options expiration at the end of the day tomorrow, if it were to stay in that area, would have a potential gain on the trade of about $785. Now, as it is right now, this actually has adjusted from where it was earlier today. This purple line, remember, is our profit and loss as of, well, it needs to be as of a certain date. And actually, this is today, and this is going to be tomorrow. Okay, the values are pretty similar, the market maker move as well as expiring tomorrow. So it's kind of up in this range. Now, are we going to be a greedy guts and say, oh, we've got to absolutely have the max gain here? Some traders might trade it that way. They might think, yeah, Lulu's moving, man, let's try to get a max gain. Some traders might say, you know, we put out kind of big for this. This trade cost us, if we come down here, $12.25. It was an expensive trade. We put $1,225 into it. And so some traders want to get that back plus have a profit. So we're going to watch it closely tomorrow, but we're going to be out of the trade tomorrow regardless. That is going to be our plan, is to be out of it regardless. Okay. It could have easily gone the other way. What if Lulu came out and said, we sucked. We had an awful quarter. Nobody's coming in our stores. Nobody's going to come in for Christmas. Scrooge, right? We could be in the neighborhood of a max loss of what we put out here. And it's going to be in the neighborhood about that $835. Okay. It could have just as easily gone that way. And that's why I'm always want to say, hey, this is speculative in nature. Many times we're not going with a speculative trade in this class. This particular one we did. It might work out for us. We'll see. We'll see on that. We'll see how it closes tomorrow, and I'll give you the update next Thursday when we come back in our class. Now, the other trade I put on as well before the news was out. I wanted to take advantage of it before, right? They said, what is going on? This is a little bit more traditional. We did a short put vertical. Okay, so we did, and I did maybe a couple of hours before the market changed or before the market closed. And so we brought in basically about $1.70 credit on a $5 wide spread. Again, it was speculating that this trade would go up, and we need it to do what? Stay above 175. Well, right now, let's see, where's 175? 175 is down here. So even at the close, even if they had disappointed, we would just, for this particular trade, we had a lot of leeway built in there on that spread. So likely it's going to be positive. If we go to the risk profile here, come on over. I'm going to check that trade. We're going to get rid of the diagonal trade. I'm going to kind of spread this out a little bit so we can see what's going on here. This trade's a little bit different, right? The max theoretical gain is not going to get any better than $170, the credit we bought in. We could lose more than what we had to gain in this one, right? Theoretically, and it still could happen tomorrow. We could lose in the neighborhood here about 200, and looks like it kind of gets down there to like 300 something dollars, right? Low 300s tomorrow at options expiration. Okay. Now I'm expecting we're going to work a profit out here, but one trade we're really going to hopefully be able to take advantage of a move higher. This trade was more subdued, more conservative, just looking for the stock to stay above our short strike price here, which was the 175. Over here, where's 175? Right around this area. So lots of leeway there. Okay. That's what we did. Yeah, JR, you had wanted to see the Lulu trade. I can go back to the details on that, on Lulu. Let's go to our account statement. Here's our Lulu. So Lulu, I put in about 9:45 Mountain Time today. Okay. And the trade later in the day. All right, our short put vertical here, bringing in the 170 credit. I did a little bit later, so I said about 2 hours before the market closed. So it's in that range, maybe a little bit less than that, now in 45 minutes or so. It's when we put that on. I also checked what the price of the diagonal trade was at that time, and it had dropped to $8.25. Okay, so yeah, we could have gotten in a little bit cheaper, but we didn't. Okay, so this is going to be a big compare and contrast. Safer trade up here with the credit, and then the long diagonal, maybe a little bit more neutral, but looking for ultimately for the price of the stock price. So I'll update you on that next week. All right, how about some trades for today? Trades for today. Let's take a look at, we've got 2 Lulu trades going. So that's going to be one of our initial trade. Metals and mining today, man, they just broke out. Did you guys see these? They've kind of been on a tear. If we look at, say, a gold futures contract, we're not going to trade the futures contract. But boy, it had a nice little breakout, maybe out of this area, short-term resistance, but just really kind of a nice little bounce. Okay. So your silver is actually a little bit stronger even. In fact, it has been on a roll for about 3 days. Here was a hold. It's been going. Trade we're going to look at, the stock we're going to look at is Barrick Gold. Okay. Barrick had a nice move. If we come back here, actually, that's not, I want to show you the time. It hasn't been this high for a while. So that's a 3-year chart. Let's go out here 5 years. Wow. It's actually even up higher than it was 5 years ago. Okay. It's not going to be an all-time high on this, but it is a high where it hasn't seen daylight for a long period of time. Okay. So metals and mining stocks, we're going to take a look at Barrick. Now, I didn't trade this one before the market closed. We're going to do this trade together. It will go in tomorrow morning. All right. On this one, you could be, how bullish are you? Are you very bullish on it? Would you be somewhat bullish on it? We can see the MACDs rolling up here, so we see the momentum has shifted. Implied volatility peaked up a little bit, not a big deal today. Let's look at the trade tab on the options. Okay. Now, this is not enormous implied volatility like we were seeing on Lulu, right? 283% on Lulu was just major. Okay. This is just, it's already gone through its earnings, right? So it's kind of past that period. And implied volatility is a little bit higher, but not extreme, right? Not like, oh man, let's sell some of that premium. I am just chomping at the bit for it. Okay. So on this trade, there could be a number of ways that somebody might want to trade it. If you're somebody that's comfortable with credit spreads, you might do a credit spread. Somebody looking for a little bit more, maybe a little bit more movement in it, maybe you would look at a debit spread. Or if you're somebody that's like way bullish on it, you might do just a long call or a long synthetic, right? Where you buy the long call, sell the put, maybe let it move for 2-3 days. If it moves up for you, take some money and jump out. Okay. There are going to be all varieties of how bullish somebody might think this might be. And depending on your experience, different traders are going to pick different things here. All right. On this one, we are going to do 2 trades. We're going to do a long vertical and a short vertical. Both of these are going to be on the January 16 contracts because that's where we've got a lot of great open interest. And what we're going to do on this is we're going to compare for what we have risked on the trade, which we can do $1,500 on any trade. We're going to do, well, if we risk it on a long vertical, what is it? If we do it on a short put vertical, what is that going to be? Okay. We're going to start with the put vertical. And we're looking out here. I was looking to do, it moved quite a bit from what I was looking at earlier. I was looking to do the 4240. We're going to keep it. We'll just keep what I had mapped out. Okay, we'll go 42. Spread it out by $1 here, or an extra $1, I should say. 42.40. We've got a 72-cent credit here. All right. On a $1 wide spread, that's a decent credit, isn't it? So we would be risking $2 minus 72, which is going to put us at what? $1.28. We're risking $1.28 to make 72. And this is looking a little, this is a probability of expiring in the money. Let me just switch that real quick. Let's go to probability OTM, because since this one's a credit spread, that might make more sense to some of you. All right, expiring out of the money, we're looking at about 56% here. Some of you might not be as comfortable there. Some of you might be more comfortable at 41. In any case, there's a lot of open interest. You could, place it where you're most comfortable. Okay. Because it was kind of a big move, we're going to be a little bit more aggressive on this one. Okay. And so if we can risk 128 per contract, let's see how many contracts we can do. All right, we can risk 1,500 per trade in this class, and we're willing to risk 128. We could do 11 contracts. Okay, so that's what we're going to do. We're going to do 11 contracts. Oops, it was a little too high when I started clicking. All right, we're going to do 11 contracts. All right. Now, typically, I'll put in a buyback order, an order that says, hey, if we get a chunk of this, let's get out. Let's use the same chunk of on both of these trades. We're going to go 75%. If we can get 75% of that max, 72 cents, we are going to say get out of Dodge. So let's do first trigger sequential. Let's put in an opposite order. And let's go back to our calculator. If we can get, I'm going to go with 75%. Okay, 75% times, well, actually, if we get 75% of 0.72, then only 25% is left. That means go buy it back at 18 cents. Okay, we're going to buy it back 18 cents. And we're going to do a good till canceled. All right. And we're going to send this. I'm going to have to watch it tomorrow, make sure it gets filled. It's not guaranteed to be filled, but if it continues where it is, or if it moves big, I may have to adjust the price. Okay. We're going to put that in option strategies. We're going to send that on. If you were feeling like doing maybe a long vertical, let's do that. Okay. On a long vertical, the one I was looking at here, typically we'll do an at the money, start at the at the money strike. So let's go on this one, 43.45. We'll say buy vertical. Change this guy down to 45. So we're willing to risk 83 cents to gain what? $1.17. Right? $1.17 will be our max theoretical gain. So bring out the calculator. Clear it out. If we can get 75% of one, well, actually, let's do this first. If we're going to risk $1,500, it's going to cost us for every series of contracts 83. We can do 18 contracts. Now, some of you are going to have accounts. 18 is easy to do. Some of you might have accounts that you're like, no, I'm just going to do 2 contracts or whatever. Okay. In this case, we said we can do 18 contracts. And then let's go ahead. We're going to put in our first trigger sequential. We're going to put in create an opposite order. Does this stock need to move? For this trade, it does. We need it to go where? We need to go above 45. Is 45 a big move? It's going to be a move. Okay, 45 is going to be right there. It got as high. It didn't get into the 44 today. We got 36 days. We absolutely need the stock to move. So this one is going to be the more conservative trade. Short put vertical is going to be the more aggressive trade. Okay, we're risking the same amount on each trade as far as $1,500. If we can get our 75%, clear this out, we get 75% of our 1.17. That says would be content with 87 cents. We'll add 87 cents to 83 cents. We're going to say go buy it back at $1. I think that's at $1.70. Is that right? I'll make sure. $1.70. All right, $1.70 it is. We're going to put this good till canceled. We're going to send it on the way. Now, in your particular case, you might not have liked either of these. That's okay. But if you want to learn the strategies, go ahead, put them in your paper money account so that when you come to class, you can go, I was following this one and I had this question come up. All right. Makes it a lot easier for you to learn, to understand, and really get a feel for the strategies. So we're going to put this in our option strategies bucket. We've got a lot of trades to pay attention to over the next few days here. All right. Let's see. Somebody's asking why yours is green JR66. I'm not sure what you're saying as far as 75%. Maybe you like to do a 50% and a 75%. I think that's where we're getting there, Chuck. I'm not going to do a 50% and 75% because I already pushed the trade on through before I saw your question there. All right. You guys have been great. Have you become the subscribers? I hope so. Just makes it so much easier to find our content. You can see our Trader Talks channel. You can come down and see a playlist. Maybe you're not comfortable with some of the strategies we talked about today. We did several. We have an earnings play. We've got a short put vertical. We've got a short put vertical on the earnings play of Lulu, as well as a more conservative trade here with Barrick Gold. You can come out to our playlist and find previous classes, and it just makes it so useful. You can also see what's coming up, right? If I come over here to the home, yeah, this is the last class for today until I say a regular webcast. We've got our market outlook. That's going to happen at, I believe, 7 Eastern time tomorrow morning. We're going to have our Trader Talks class bright and early right at the opening bell. James is going to be there with Kevin or somebody else. James will be there for sure, talking ETFs. We don't record it. You've got to be there live for that session. All right, you guys. We got a whole bunch done in this session. I hope you kept up with me. We are kind of going through at a pretty brisk pace. Cameron, thank you so much for your help in the chat. You had to answer a few questions there. I did not see a survey out here in this class today, but if you found this helpful, hit the like button on the way out. Follow Cameron and I on our X account. Cameron may see us, Connie Hill see us. And if you found this useful, go ahead and hit the like button on your way out. Okay, you guys, we'll see you a little bit later tonight. Bye-bye.